Hey everyone, Couch Investor back to another video for today. So let's talk about the most talked about company in the market right now, and that's Nvidia. Now, of course, we talked about Nvidia plenty of times on this channel. Now, I already made a point in a previous Nvidia video as to why if you give me your money, I will not be buying Nvidia shares. I will again explain the rationale behind that decision. Now, of course, with the AI hype, which you can see in this picture right here, right, the mentions of AI during earnings calls have obviously gone up tremendously in the last couple of quarters, actually the last 2 quarters. Now, what's very interesting to see is that this acceleration has actually started back in 2016. Now, with regards to Nvidia specifically, of course, the rise in the stock price was warranted because of their huge beat on guidance, right? They basically guided for 53% growth based on the consensus numbers, 7.2 billion or something like that. They guided for $11 billion in revenue. And of course, after that, every analyst had to upgrade their price targets, their models, etc., etc. Now, how does this look like until 2027, 2028, you might ask? Well, as you can see, analysts now expect Nvidia's revenue to triple in just 4 years, reaching $83.6 billion by fiscal year 2027, with a 60% EBIT margin. Now, if we put a price to sales ratio, a multiple there, so that means that you're paying around 13 times 2027, fiscal year 2027 sales here, which is still not very cheap. Now, of course, you're not just looking at the price to sales ratio, the multiple you put on that, you're also looking at how much free cash flow this company will generate in the years to come. Because as the more and more free cash flow they can generate, the more they'll be able to reinvest in the business, or maybe acquire other companies, or pay a better dividend, or buy back shares. Now, saying that, 13 times sales, fiscal year 2027, in my opinion, is still very, very high, all things considered. Now, going back to the guidance for Q2, some of you might not know what might happen in the second half of the year. Have they projected something? Have they given us extra numbers? So I'll give you a little more information with what was mentioned into the earnings call. So we got a comment from Executive Vice President and Chief Financial Officer. So we are expecting not only the demand that we just saw in this last quarter, demand that we have in Q2 for our forecast, but also planning on seeing something in the second half of the year. We just have to be careful here, but we're not here to guide on the second half. But yes, we do plan a substantial increase in the second half compared to the first half. And yes, they believe that the supply that we will have in the second half of the year will be substantially larger than in the first half. Now, that said, if you've been following the company for a while, you know that data center has overtaken the other business segment as the largest and the fastest growing one. This is basically what is pushing this huge guidance. Now, with regards to data centers, as we've said in the past a lot of times, we're talking about hardware. But Nvidia has already hinted last year that software will become substantial in years and years to come. Subscription models, Omniverse, Nvidia's AI, and of course, with software, this is higher margins. As we've seen, 60% EBIT margin, fiscal year 2027. Software will come as they install more and more data centers, as they chip out more and more GPUs. Because all these customers, of course, they're looking for the full stack solution. And Nvidia is obviously trying to provide that, something that not a lot of players have the capability of doing. Now, we do have some comments from some analysts, and then we're going to have a look at more valuation metrics. I'll still try and make my point here. But if you enjoyed this type of videos so far, leave it a thumbs up, subscribe if you have not, would really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. By the way, yesterday's video was about Intel and potentially maybe their first 18A, the internal foundry model client, might maybe be Nvidia. If you're interested in that, go watch that video. It's going to be in the top right corner. Now, an analyst at Barclays spotlights immense potential for AI and points to Nvidia and Microsoft as key names. So it says here, we believe that most of the near-term economic value attached to AI will accrue to a handful of key names in the foundational hardware segments of the AI value chain. Of course, the bank argued that Nvidia is the best example of this, pointing to the chip maker's recent guidance, which the company says indicates that it is capturing nearly all of the near-term AI economics at the component layer. Then we have a comment from, of course, well-known analyst from Wedbush, Dan Ives. He says the massive $800 billion AI opportunity is now on the doorstep for the tech sector for the next decade, and real monetization of AI is happening much sooner than expected, with Nvidia's recent guidance and our channel checks giving further confidence in our AI bullish sector call that kicked off in January. He finished off by saying, in a nutshell, while valuation in tech will be front and center, we continue to believe AI is driven the tech sector to a 1999 moment with a long runway of growth ahead that we have not seen since the 1990s. Now, of course, when talking about the 1990s, approaching the dot-com bubble, that's exactly what he wants to talk about here. A 1999 moment is where the huge companies that we know today actually started to gain some traction. Of course, during the dot-com bubble, there was a huge bubble, which I don't think we have today, although some companies, yes, just use the AI hype to pump up their valuation. But if you look at the crucial ones, the big companies here, in my opinion, have a real claim to take a lot of those profits, which is something that we could not really say back in 2000. Back then, there were great ideas out there. Great ideas, but no product, no money, nothing. Today, you have great ideas, but you also have products. You already have a product to show. You already have software, hardware, GPUs, data centers, generative AI applications, etc., etc. So that's, in my opinion, the big difference here between what's happening now and what happened 23 years ago. Now, with regards to Nvidia specifically, right? Year to date, it's already up 188%, which is pretty crazy. But here it is. Even though it gave us insane guidance, forward PE 47 times, price to sales ratio in the next 12 months, 21 times, which again is not cheap at all. Of course, other companies, right? Other companies that are not growing as fast as expected and their stock has gone up and their guidance wasn't great, then they became more expensive. With Nvidia, since their guidance was 53% more than expected, of course, the stock went up as well, but not as much in that small period. Then, yes, valuation metrics have actually compressed a little bit. But, and here comes the most important part, why I'm not taking your money and putting it in Nvidia. Nvidia right now is a $1 trillion company. Again, how much bigger will this company become? A $2 trillion company? A 3, 4? When will that happen? In 5 years, 10 years, maybe more? Who knows? Again, yes, if free cash flow becomes bigger and bigger, then they can buy back shares. And as you know, the more you buy back shares, the higher value you get as a shareholder, even if nothing really changes substantially. But today's standpoint, you give me your money, I'm buying Nvidia. What happens if there is a tiny miss, or if guidance isn't as good as expected? You can definitely expect the stock to crash substantially. And so right now, in my opinion, in the short term, although in the long term, this company will continue to grow because yes, they are doing the right thing. In the short term, there is a lot of risk. The reward right now, not that much. That's just my opinion. Of course, I own Nvidia in a separate portfolio where there's only 4 companies there: Nvidia, Alphabet, Microsoft, and now Deere company. And so when looking at the graph, it's no surprise that we'll see this stock on a weekly basis very much overbought. Of course, on a daily right now, it's back a bit under the overbought region, but overall, a small miss could cause this stock to drop substantially. And will this miss happen? I don't know. I think they're still getting a lot of momentum here, so we might not get a miss in Q2. But if guidance isn't as good as expected, then yes, expect the stock to take a big hit. Again, I'm talking towards people that are looking to buy the stock right now. In my opinion, there are other companies out there that might grow much more than Nvidia. Remember, it's already a $1 trillion company. Can it become a 2 trillion, 3 trillion? Yes, if they continue like this, probably. But when will that happen? Can you see other companies that have a better potential to get a 2, 3, 4x? Probably yes. So that's about it for this video from me. Of course, do share your thoughts down in the comments below. Again, there's no shame in taking profits. I take profits, you take profits, lots of people take profits. Nobody that has taken profits ever has ever regretted it. So that will be it for this video. Leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.